Hey, I think we all deserved that break and we're all back. Thank you. We're going to continue now with learning unit 4, recording cash transactions. We will just recap on our learning unit objectives and learning unit outcomes. I did share this earlier on in the slide also. Okay, again, please remember that there will be some theory questions and practical differentiate between different types of source documents using related journal entries for basic cash transactions, explain the use of the different subsidiary cash journals, record the source documents in appropriate subsidiary cash journals, and then post the cash journals to the general ledger and prepare a simple trial balance. Okay, so these are our learning outcomes or learning unit objectives for learning unit 4. Very important again, please to study the table on page 109. For now, we are only focusing on this 3 subsidiary journals for learning unit 4. In learning unit 5, we will though go more into detail with the rest of the subsidiary journals, but do expect that you could get possible theory questions on all the journals. So it's very important that you have to study this table, also the abbreviations, the type of transactions, right, that are recorded in these subsidiary journals, and also more importantly, the source document. So what happened here is what we've done in Learning Unit 3 now. When we mentioned all those different source documents, we've now linked them to specific subsidiary journals. Those cash slips, those invoices, those receipts that you just mentioned to me in the earlier session, the first session, and now we are linking those source documents to a specific subsidiary journal. Okay, right. So you see the importance of learning unit 3. We will just revise again what different transactions are recorded in these cash journals in our CBR, which we know is our cash book receipts. What transactions do we record in there? What the owner has contributed to the business in the form of capital. If the owner has borrowed money, okay, so he's got a additional loan and has received the payment from the bank, then that will also be recorded into the cash book receipts. So the cash book receipts, again, from the previous slide, any transaction that causes the balance of the bank account to increase. Okay, so capital contribution increases the bank balance of the business. If we received money in the form of a loan, it increases the bank balance. Payments from our debtors, okay, will also increase the bank balance. Cash sales, rental monies from a tenant, interest received. And please remember here, there's 2 different types of interest that can be recorded into our cash book receipts. Can anyone tell me what are those 2 different types of interests that could be recorded here? Okay, I'll give you some time. We will also revise that once we practice the transactions. So we have interest on current account. That is when the bank has a favorable bank balance. And then we have interest on our investments, our fixed deposits, right? That will also then increase our bank balance. And then the cash book payments, the definition is that any transaction that causes a decrease in the bank balance of our business. So what are those transactions? Any cash purchases of trading inventory, equipment, vehicles, etc. Cash payments for all our expenses, wages, water and electricity, and any payments we make to our creditors, and any interest that we pay, and also when we have to take out money for our petty cash, it's transferred from our bank account to our petty cash. So that also decreases our bank balance. And then what transactions go into our petty cash? Any small payments, postage, staff refreshments, fuel, where the owner is not doing an EFT payment. Okay, so small cash payments. Right. So now we need to practice. We need to do an activity. So let's have a look. Let's read the instructions carefully. They say record the following transactions in the journals of JJ Traders. The business uses the perpetual inventory system. I know that you know that there are two inventory systems. It could either be the perpetual or the periodic inventory system. Okay, this business uses VAT. Also, just to take note that you could have also where a business does not use VAT, or an activity where they said you must ignore VAT. Okay, right. But in the activities that we have practiced in class for Learning Unit 4, we were supposed to take VAT into account. And you know the different types of VAT. You will have input VAT and output VAT. And here again, that calculation that we just did earlier in Learning Unit 3, remember I told you you're going to have to use that calculation again when we have to calculate what is the cost of sales and the business is using the markup on cost. Okay. All right. So these are our different transactions, and hopefully from the previous slide that I've shared with you, you are able to identify now, just having a look at this, where are we going to be recording these transactions? Again, also take note, my layout is a little bit different, and I will share with you in the one of the slides later on how from a past test paper how this question could also be asked. Okay. All right, so here we have the first transaction. The owner J. James deposit 50,000 as his capital contribution into the business's bank account. Okay, so we need to know now where are we going to record that transaction. Can anyone tell me where are we going to, or identify for me from all these transactions over here, which ones will go into cash book receipts? Maybe you can just give it to me in the form of the dates, like 1/4/10 or 1/4/6 will go into the CBR. 10, 12, and we'll go into CBP. Maybe I'll just give you 2 minutes. The last transaction is the for fuel out of petty cash. Okay, so maybe you can just, according to the dates, you can give me your answers. Where are we going to be recording the transactions that will go into the CBR, which is the cash book receipts? Which transactions will go into the cash book payments, and which one will go into petty cash? I'll give you 2 minutes just to give me those answers. Okay, and then I have another 2 over here on the 28th and the 30th. Okay. Do you need extra time? Okay, always remember also on the table that I shared earlier with you, the source documents are very important. They can also guide you to know in which subsidiary journal you have to record the transactions. Okay, cash slip, cash register roll, cash invoice, receipt, EFT confirmation slip, petty cash voucher. Okay, so those source documents, if you know those three important source documents, they can help you to identify which transactions need to be recorded into which subsidiary journal. Okay, so if you look at receipt, who can tell me where are we going to put the first transaction? Are you all able to hear me still? It's very quiet over there.
Yes, ma'am.
Okay, CRJ, well done. Thank you. Thank you. That's very good. Thank you so much. That's correct. Right, so that will go into the CBR, right? Cash book receipts. You can just, okay, right. And when you're answering this question, maybe I could give you a tip that before you start actually recording, or if you're going to have time, your reading time, during your reading time, these are the things that you can note down on your question paper, only on your question paper. Okay, is to identify where am I going to be recording these transactions. So that is CBR, sale trading inventory for cash. Where are we going to be recording that? Also,
Yeah.
you are cash book receipts. Well done. Okay, remember sold. You selling. So it's CBR, cash book receipts. Okay. Also, right. Thank you, Keegan. Right. Well done. Then you have a direct EFT deposit. So the minute you see it's a deposit, okay, for the monthly rental. So you're receiving money, okay, so that will also go into the cash book receipt, CBR, right? See, right, and CBR. And then, of course, we have on the next slide, the cash sales will also go to our cash book receipts. And then we also have the interest on the fixed deposit. Okay, we're receiving money. Okay, and remember another name for fixed deposit is an investment. Okay, so if they say interest on investment, it's the same as fixed deposit. Okay, so those are the transactions that will go to our cash book receipts. So here we purchase via EFT, right? And we received a discount. We paid the water and electricity. So again, these are all expenses via EFT. And we know the source document is the EFT confirmation slip. We paid the monthly salaries via EFT. source document, EFT confirmation slip. And then again, I told you the source document will guide you, petty cash voucher. So we know that this transaction must go into the petty cash journal. Okay, we bought tea, coffee, and milk. And then we did payment for fuel, also out of petty cash. So those two transactions will go into our petty cash journal. Okay, very, very important. But also, what did I tell you regarding Learning Unit 3? So in Learning Unit 3, we also focused on not only source documents, what did we focus on? That I told you now you're going to have to apply when you are recording these transactions in your journals. Can anyone tell me? What did I say is very important for you to remember here? How to calculate VAT, very good. But before you're calculating VAT, you need to also know your categories, when to calculate VAT. Okay, because some of the transactions, there won't be VAT. Everybody happy with that? Remember, I told you you have standard rated, you have exempt, you have zero rated, and you have none allowable. So you need to know when to calculate VAT or not. Okay, so please don't waste unnecessary time calculating VAT on transactions you should not be calculating VAT for. Okay, so in my next slide. Also, yes, not forgetting bank charges is an expense. So where will that go to? It's a payment. So bank charges will go to the cash book payments. Okay. So please remember that. Okay. All right. Okay. So we're going to this is our instructions from these transactions. We're going to prepare the cash book receipts, our cash book payments, petty cash, but they also want us to do the general ledger and only those three accounts. But you need to revise all the accounts. You'll see in the slide that I'll share. I will just go through with these three examples for you. Okay. Right. So please also to note again just what I said earlier on, we do not calculate VAT in the cash journals for the following transactions. No VAT on capital contribution, no VAT on the loan, no VAT for money drawn for petty cash. I'm sure you remember this from question 4.8. No VAT for drawings of cash either out of cash book payments or petty cash. We do not calculate VAT on salaries. We know that any interest is exempt, so we won't calculate VAT. Fuel or petrol or diesel, zero rated, so we won't calculate. And then also our staff refreshments or entertainment expenses, non-allowable also, whether in the cash book payments or, sorry, I meant to say petty cash journal, we do not record VAT. Everybody happy with this? Just giving you a reminder again. Please, you have to remember this. Okay. Right, so here's our cash book receipts. And remember, in your answer book, they will give you the headings, okay? But you need to remember where to record. As Mahlogonolo. Edith said, yes, we must know. What do we need to remember from Learning Unit 3? How to calculate VAT. So we are going to do those calculations again here. How to calculate the exclusive VAT amount and the VAT amount. And always remember that you you can use again whichever method you want to, the easier method or what you want divided by what you have. But please remember, show your workings. Okay. Right, but bank and analysis receipts, those amounts will always be inclusive of your VAT, right? In the output VAT will be your VAT amount. Your sales is the 100, which is exclusive VAT. And then in sundry accounts also that amount will be the exclusive, and cost of sales will always be the exclusive VAT amount. Okay. Then let's just have a look at our answers. Again, we know we have a day column. That is the date of the transaction details. There we record from who did we receive the money. Okay, and this was the owner's contribution. So the money went directly into the bank account of the business. And we know, we just mentioned earlier, no VAT is to be recorded on capital, and also no, or please just a reminder once again that if you do not have a specific column like we don't have a column for capital, so it has to go to sundry accounts. Okay. And then you just need to put in the details. What was the money for? It was for capital. Please do not write capital contribution. The account's name is capital as per your chart of accounts in Learning Unit 2. If you go back to your chart of accounts, you remember the account name is capital, capital, capital. Okay, then if you go back to your transaction, so this one was a little bit tricky, guys. Let's just read the transaction again. We sold trading inventory for cash, but with a cost price. Okay, so yeah, they gave us the cost price. So what must we calculate? We have to calculate now what is the selling price. Selling price. Okay, right. So, and then, of course, we need to calculate the exclusive, the VAT amount, and the inclusive amount here. Okay, so again, very important, a tip that I gave you earlier on, read very carefully. Okay, if they say excluding VAT, then it means you still need to calculate the VAT. Okay. They will also tell you all amounts will be inclusive of VAT unless otherwise stated. Okay, so very important just to read your instructions very carefully on the question. Okay. Right, so how are we going to do that? Yeah, this was the amount that was given. We were not given the selling, okay, we were given the cost. So we needed to now work, okay. We usually have to work from, we are given the selling price and then we have to go this way, okay. Right, from we are given the answer year or the inclusive amount, and we have to then calculate the VAT and the sales and then the cost of sales. But here we were given the cost of sales, but now we had to calculate what was the exclusive VAT amount. Again, what you want divided by what you have. Okay. We know that the markup was 25%. So what I want. The selling price is 120 is what I want. And then what I have is the 100, which is the cost of sale. So that gives me my sales. And then again, once I have that answer, I can go to my inclusive VAT amount. And once I have the inclusive selling price, I can then subtract those two amounts from each other to get my VAT amount. And always remember this, please. We've seen it in so much, past answers that students gave us, always remember that your exclusive or your selling price must be the greater amount. Can you see? Okay, so if you look at the inclusive amount, it's greater than the exclusive VAT amount. Okay, and similarly here also, your cost of sales will also be a smaller or lesser amount than the sales. Please always remember that. Right. Then, of course, we know we must calculate VAT for rent. Okay, so again, you can use the formula you're more comfortable with, the easier method, or what you want divided by what you have, right? And then this is the one now. Of course, I need you to do some calculations for me here. So I need you to give me the answer for the transaction on the 28th for cash sales. And then also, um, I've given you the answer for the interest on the fixed deposit. We know that it's exempt supply, so there is no VAT. So it goes straight from the bank into sundry accounts. Okay. So I'll give you a few minutes just for you to see if you can do that calculation for me. I've given you now the inclusive VAT amount. Okay, so you need to calculate for me the output VAT and the sales and then the cost of sales. Very important to also note, please, that we always record our transactions in chronological date order. Very important. But sometimes if in your test you do miss a transaction and you're going thin, it's fine to write it at the bottom. Okay, but always just remember, correct date order. You must show your source documents. Also very important. Okay. Okay. So we will be using those calculations from Learning Unit 3. So let's see, are you ready to share your answers? If you have your answers for the VAT amount, the exclusive VAT, and the cost of sales, please share your answers on the chat. Okay. Um, Anybody willing to share their answers? I know you know how to calculate VAT. Okay. Madeline, Keegan, Tatum, Mhlongo, Nolo. Any answers for me there for output VAT, sales, cost of sales, before I share the solutions, my solution? Okay, I think are you all with me still? It seems very quiet from your side there. Please, can I have a thumbs up that you're still online? Thank you, thank you. Okay, right, there we go. I don't know. Right, let's just see, since I know we also against time, guys. So there's your answer again. Um, I always like to use the easier methods. I always first get to the um, sales amount over there, right? So sorry, it's not a multiply. Sorry, it's supposed to be we are dividing, sorry, by 1.15. Okay, so you divide. Remember, when you go from inclusive to exclusive, we are dividing by 1.15. I'm sure that answer of mine is um, correct over there. Oh, sorry, no, 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 no. My apologies. I think yes, yes, Madeline, that's correct. Guys, we need to divide by 1.15, sorry, and um, not multiply. Right, so if we're going to divide 10,500, so sorry about that. So what answer are we going to have there? We're going to have 9130. Are you all happy with that answer? Thank you. Thank you so much, guys. I think I realize now what I did. I actually had the answer as the question as exclusive, and then I changed it to inclusive. There we go. Thank you so much. Thank you so much. So we have 9130. So please do ignore my answer over there. So it's 9130. I think I have it there. Okay, Paran, thank you for being online. I see you've somehow other sorted um, your sound out. Well, I'm very happy for that. And then, of course, guys, again, please to note here, again, to read the instructions, whether you need to round off to the nearest rand or to show your decimals. Okay, right. So I've rounded off to the nearest rand, and I know that Paran has given you the answers to two decimals, which could also be fine, all depending again what the question says, you or the instructions on your question. Okay, so please just do note that. Right. So again, you can use what you want divided by what you have, or you divide by the easier method by 1.15. And then once you have that amount, you will then do your calculations. Okay, please do accept my apology for that. But again, once you have your exclusive, it will be the inclusive minus the exclusive to give you the VAT amount. And then this is what I needed to stress for you now to remember over here is that to calculate the cost of sales now, we need to work, we know this, whenever you do markups, you work on the exclusive VAT amount, exclusive VAT amount. Okay, so please remember that. So the formula again, when it's markup on cost, cost price will be 100, markup 25, selling price 125. So we're going to use the given, multiply by what you want, divided by what you have, and that will give you your cost of sales. Okay. Right. So please just remember that markup formula that we've revised in Learning Unit 3. Okay, then very important, the instructions told us that we needed to total the bank column. And when we have to total it up, it means we need to add up all these amounts in the bank column. And the reason why we need to add them is because we need to post this bank amount to our general ledger. And you know the double entry for cash book receipts. We debit the bank and we credit output VAT, credit sales, credit capital, credit rent income, credit interest on fixed deposit. The only difference or account that we don't credit here will be cost of sales. Cost of sales will be debited, but you know that is the second part of your double entry for cash sales, Okay. Right, so we need to move on now to our cash book payments. Again, you have your document number, your day, details, or name of payee. Bank is again your inclusive VAT amount, and now it's input. Please take note, now it's input VAT. In the cash book receipts, it was output VAT. Okay, and then it could be trading inventory, and you could even have other additional column headings in your answer book, all depending. And then you have your sundry accounts. Okay, again, just take note where you have to calculate inclusive and exclusive VAT. Okay, and we have identified our transactions already. So again, going from inclusive to exclusive, always remember we're going to, again, I like to use the easier method. So um, let's just again look at that transaction again. It was a little bit tricky in that, not really tricky, it's just that we gave a discount. Sorry, let me just go back to the actual transaction where we purchased inventory and we received a 10% discount, okay, from our supplier Ace Traders. So again, the first thing we need to do is to subtract that 10% discount. Okay, again, there are two methods. You can either use a long method or a short method, but both methods should get you to the same answer. Okay, so just please remember that you should still be able to get to the same answer. So again, to get to the final amount after discount, this is the short method that I use. I took the 8,500 multiplied by the 90% or 90 over 100, and that then gave me the inclusive VAT. And then from there now I can calculate my exclusive VAT and my VAT amount. Okay, again, you can use the easier method as in the textbook or what you want divided by what you have, and that should then give you the same answer. Okay, we know that for water and electricity, yes, we're going to calculate VAT, and because we don't have a column for water and electricity, where will it go into? Sundry accounts. Okay, and don't forget to write water and electricity. Right. Then, of course, we have the salaries, right, that we have to record. And of course, the bank charges, my apologies there. Don't forget, we also had a transaction for bank charges that has to be recorded in our cash book payments. And of course, now we were supposed to total our cash book payments, right? To um, take that total amount to our general ledger. And again, what is the double entry? You know this from um, Learning Unit 2, where we introduced you to the double entry system, dead click, dead click. For every debit entry, there has to be a corresponding um, credit entry. Okay, right. So we're going to debit because now it's cash book payments. The bank account will be decreasing. So we're going to credit the bank and we're going to debit all the other transactions. Okay, debit water and electricity, debit input VAT, credit the bank. Okay, debit trading inventory, debit input VAT, credit the bank. Debit salaries, we know, I just mentioned earlier, there will be no VAT calculated for salaries. So That is why I did not record any VAT. So please again, just remember your categories, okay? When to calculate VAT and when not to calculate VAT. Okay. Right. And please don't forget to read the instructions. If they tell you to total up your bank column, it means you need to add up all the amounts in the bank column, and then that will be the total that we will post to the general ledger. Okay, you know your monthly bookkeeping steps. Okay, you know those 5 steps. After the journals, you have the general ledger, and then you have your trial balance. Okay. So let's look at our petty cash. We only had 2 transactions. Again, we know this is for small payments, small payments. Again, document number, petty cash voucher, the day, okay, year. You'll also see you have to put in your date, your details, and then into the petty cash column is the inclusive VAT amount, it's input VAT, and then we have staff refreshments column, and then again, if it's not staff refreshments, for example, if it's fuel, if it's drawings out of petty cash, if it's stationery, if it's postage that we bought, it will then have to, and we do not have a column for it, it will then go to sundry accounts. But also take note that it will be exclusive of that. Okay, right, so very important to note where we record the inclusive and where we have to record the exclusive VAT amount. And of course, do we calculate VAT on staff refreshments? Who can tell me? Where will we, what is the category for staff refreshments? Thank you, Madeleine. Staff refreshments is non-allowable. Okay, so no VAT will be recorded there. Okay, right. So let's proceed. So there we go. And what do you see that is different here to our petty cash is that in our details, we actually record what we use the money for. We don't write the name of the business as we did in our cash book payments. Here we actually say it's for tea, coffee, milk, or fuel. The only time you will put the name of a supplier or a business is for when you've purchased trading inventory. Okay, but otherwise, always remember, if it's postage, you write postage. If it's, in this case, we bought refreshments and we purchased from um, um, the business. What did we buy? Tea, coffee, milk. So that is what we will write. Okay. Again, it goes into petty cash, and because we have a staff refreshments column, it will go there. Fuel. Okay, we know that we don't calculate fuel. Fuel is zero rated, so again, but we don't have a column for fuel, so it will go to sundry accounts. And not forgetting, you must give, you can write the name of the account must also be fuel into your details. Okay. Please remember, do revise the other transactions. These are just the example of transactions I gave, but there's different other transactions that could also be recorded in your petty cash for small payments. Okay. Right. Now the next step after your journals is your general ledger. Okay, so what do we do in our general ledger? This is where we apply our double entry system. We know it's T accounts, and on our T accounts we have 2 sides, which is a debit side and a credit side, also known as a left-hand side and right-hand side of our T accounts. And also very important to note that if you have amounts on either side, if you've posted to the debit side and the credit side, you must remember to calculate a balance. Okay, so you have to calculate what is the difference between the two, and that will represent a balance. Okay, so we're going to look at different examples where we might only have to record on the one side and then on both sides of the T account. Okay. Debt click. Okay, again, you know, in Learning Unit 2, we could not stress the importance of your debt click. So here also again, I've just given you a reminder that your expenses, assets, drawings all have debit balances. They increase on the debit side and decrease on the credit side, and your click, which is your liabilities, income and capital, they have credit balances, increase on the credit side, decrease on the debit side. Okay, so please, very, very important when you are posting to the T accounts in the general ledger to apply your debt click rules. Right, and again, very important key points to remember when posting to your general ledger. Please do insert your dates. Cross-referencing is important, which is your contra account, your folios, and then of course you need to total and balance your accounts if you have amounts on either side. Okay, so here we were posting from the cash book receipts. We were posting the capital amount, and we know that the double entry was debit the bank, credit capital. Okay, right, so capital had to be recorded on the credit side, and our contra account is the other account, and in this case our other account was bank. Bank was the account that was debited. I have my folio, I have my amount. Okay, so please do not forget folios, because we do allocate marks for the folios. So please remember your folio is, which is the journal I'm recording or posting from. It could either be cash book receipts for this transaction, and then you're going to see in the next account. I'll just go where they wanted us to post to the bank account. If you can still remember in the previous slide shared, I told you that the bank balance on the account was 5,500. They gave you an opening balance, right? So if an opening balance is given to you and it's a favorable bank balance, always remember you will then record it on the debit side of your bank account, okay? And you will put down the date as the first. Details will be balance brought down. Okay, and please note you have to record the balance on the correct side. If they say it's an unfavorable balance that the business had, then it will be on the credit side. Okay, so just remember that. And when we are posting a total, okay, then always remember it will be the end of the month's date, because you're posting a total now. I know many students, because in Learning Unit 2, remember, we recorded individual transactions, but in Learning Unit 4, because we are posting from journals where we have column totals, we only record the total. So please, it's not cash receipt. Your lecturer won't give you marks. If you write cash receipt, you must say that you are recording the total of the bank column from your cash book receipts. And you are recording the total from the cash book payments amount. Okay, and again, what is bank according to the chart of accounts? Who can tell me? What is the double entry rule according to debt click for bank? What type of asset is bank? Okay, so we know that bank is a current asset. So according to the debt click rule, assets increase on the debit side and they decrease on the credit side. Now, the important thing to understand when posting to the T accounts is very important for you to understand what are you trying to calculate here. So you have to understand the transaction also. You want to know how much money the business has in their bank account. Okay, so they had an opening balance of 5,500. We increased the balance of the bank account. Okay, from the transactions that we recorded in our cash book receipts, and then we decreased the balance of the bank account by the payments, the amount of money that we had to pay out for our total payments. And now what do we have left? Okay, is our balance carried down. Not forgetting, according to the debt click rule, or what I just shared earlier with you, that if you're recording amounts on either the debit side and the credit side, it is important or essential for you now to calculate a balance. Okay, because if you looked at my previous slide for capital, we only had the entry on the credit side. So we did not have to calculate a balance carried down and then brought down again. Right, so yeah, yes, we have to calculate a balance. Right, so again, I know you know your math, you know how to add, you know how to calculate the bigger amount. So you total up the two amounts on the debit side, which is the greater or bigger amount. Okay, so you add up that, and then always remember the totals on either side must be the same, right? And then you're going to subtract or minus the smaller amount, and that will then give you your balance. Okay, right. Oopsie, sorry again there. That's a typo error over there. Okay, so the amount should be, yes, thank you, parent, for that. It should be 66,000 Rand over there. Okay, right. So please just remember, then it's the same answer that you'll carry down to the debit side, because going into the month of May now, oh, this business is really doing well. So they have a balance of 66,000 now in their bank account. Okay, and every month the bookkeeper will just continue with doing the posting from the journals to the T accounts. And now for May, that will be the opening balance, and we will just continue. Okay, and then I've just got one more example of a nominal account section transaction. So any questions on how to calculate the balances? Okay. I've also, I think the one I wanted to give you here is where no opening balance is given and you must just post. Okay, then this is how you would then do it without a balance again. Okay, and write what answer I gave that. That is the answer I want you to calculate for me. Or what answer am I going to put here, guys? Who can tell me? I intentionally left it out so you could give me the answer that I'm going to bring down over there. What answer am I going to bring down here? There we go. Thank you, Tiro. Yes, it will be the same amount that you calculated over there. Okay, so the carried down amount will become the brought down amount. Okay, so please just remember sometimes or in some questions, if you've practiced your past test papers and in question 4.8 in your textbook, sometimes you are given an opening balance, sometimes you are not given an opening balance. So I've just given you a scenario of where it's without an opening balance and where it's um, with an opening balance. Okay, again, we know bank is a current assets, increase on the debit side, decrease on the credit side. Okay. Then we have a nominal account, which is water and electricity. And according to the chart of accounts, what do we classify water and electricity as to the business? What is water and electricity? In Learning Unit 2, it's an expense. Well done. So expenses, debt click rule again, expenses increase on the debit side, decrease on the credit side. So I just wanted to show you that entry. Okay, so it's debit water and electricity, debit input VAT, credit the bank. Okay, so also to note that the amount that I recorded here, guys, this is the exclusive VAT amount, exclusive VAT amount. Okay, so please just remember that the amount that I've recorded here is the exclusive VAT amount. Okay, okay. The inclusive amount is the amount that is already in your bank column, right, in your bank account. So that summarizes your general ledger. The last part that we need to focus on now is the last step. Who can remember that step from Learning Unit 1? After the general ledger, what is step number 5? Who can tell me what is step number 5? Can you see how important was Learning Unit 1? Thank you, Tatum. Now you are doing the trial balance. Okay. So you see how everything is falling into place, how it integrates, okay? The building blocks, the building blocks, okay? So what is your trial balance? What does it do? The trial balance, it summarizes your general ledger. Okay, summarizes your general ledger. And in our general ledger, again, what I always try to tell the students is, yeah, you can also use your debt click rules if you're unsure of what accounts or where the balances need to be recorded. Okay, right, so always remember your debit balances will be assets and drawings. They will have debit balances, and then your liabilities and your capital will have credit balances, and those balances for these accounts will be recorded under your statement of financial position section, which is made up of your proprietary accounts. So you always start with Ditiro. They I'm not sure if the trial balance, okay, you need to still know how to do a trial balance, okay. I'm not sure if it will be in your upcoming test, but you must know how to do a trial balance. Okay, they could give you all the balances, all the accounts, and then give you the trial balance template, and then you must be able to record the accounts under the correct headings and record the balances in the correct accounts. I hope you understand. I hope I answered your question, Ditiru. Okay. Right. So you still need to know how to do it. Unfortunately, I cannot tell you that it will be in your test, but yes, you need to revise your trial balance. Okay, so again, we start with our proprietary accounts. You know this from Learning Unit 2. Capital and drawings are your proprietary accounts. Then, with regard to your non-current and non-current liabilities, we're not very strict on the actual order year, but we are strict in that if you do put your income and expenses accounts in this section, we won't allocate marks for the details and but might give you marks for the amount. So it's very important that in the statement of financial position section, we only record our proprietary accounts, our non-current assets, our non-current liabilities, our current assets, and our current liabilities. Okay. And again, if you're unsure of whether they have debit balances or credit balances, please just remember your debt click rule, debt click rule. Okay. Then our nominal account section, there we record our incomes and our expenses. Again, okay. Your debit balances are all your expenses and your credit balances are your incomes. Okay, you know that from your debt click rule. Okay, right. So sales has a credit balance, rent income has a credit balance, interest received has a credit balance. So it goes on the credit side, and these are your debit balances, your expenses. And always remember that at the end, the totals must be equal. Okay, debits must equal credits. And then you know your trial balance has balanced. Any questions over there? So very, very important that you remember the debt click rule. The important thing with the trial balance is that you remember the headings. Okay, if you've worked through past test papers, you will see that they could give you the main headings, but then you must be able to know what must go under the nominal account section. Here we only record our income and expenses, right? And in the statement of financial position section, here we only record our proprietary accounts, our assets, and our liabilities. Okay. Um, any questions there? So again, what is important that you need to know here is also from Learning Unit 2 is your chart of accounts. Again, if you've seen, I haven't put in all the asset accounts. I haven't included all the liability accounts. So you need to know all those accounts as per your chart of accounts in Learning Unit 2. Okay, what are all the assets? What are all the liabilities? Okay. What are all the incomes? What are all the expenses? Again, I've only listed just a few, but you know there are many more on your chart of accounts. Yes, thank you, Perrin, on page 52 in your textbook. Okay. Any other questions? We still have 11 minutes left before 11:30. Yes, definitely. It will be uploaded on YouTube once we have concluded the session. Yes, so it will be, the recording will be available. And also to note that the lecturers at your campus will then share the recording with you, the recording link. Perfect. Then, what I've told you earlier, maybe there you can just see, I've just shared you from past test papers the layouts of how this learning unit 4 could also be asked, similar to your revision activities at the back of your textbook. Okay, right, like I said, it's very important for you to revise question 4.8 and 4.12 in your textbook, right? But here you will see the layout is a little bit different to what I've just in my example activity that I did with you. Yeah, it's the date, the source document, the details, and then the description, and then the amount. And then again in the 2024 paper, it was the date, the details, and then the source document, and then the description, and then the amount. Okay, so you will see that from both three examples that I've shared with you, what is so important here? Which column do you think is important here that will guide you as to know where you need to record the transactions? Who can tell me which column here that they've given you will help you to identify where you need to record the transactions? Okay, Tatum says the descriptions. Well done, Tatum. Yes, of course, your descriptions will guide you. But there's another very important column. If the description, maybe students are not able to understand, well done. It's the source documents, guys. That is why that table on page 109 is so important of Learning Unit 4. The minute you see, like in the 2024 paper, I'm sure your lecturer revised this question with you in class. They only wanted you to do the cash book payments. Okay. Right, and there you can see EFT confirmation slip, EFT confirmation slip, EFT. There is no cash register rolls, no cash invoices. Can you see? Right, only the EFT and the bank statement were the only source documents for the cash book payments here. Right. And then if again, if you look at the 2023 past test paper, which I hope also you have revised already or still going to revise, there also EFT confirmation slip, EFT bank statement, petty cash voucher. You see, the source document guides you, journal voucher. Now, here, unfortunately, they try to trick the students, okay? We haven't done general journal entries as yet. So this question was there just to trick you. Okay, they gave you a transaction that you did not have to record. Okay, right. Because you know in Learning Unit 4, the only three subsidiary journals that your lecturer did with you in class was your cash book receipts, cash book payments, and your petty cash. Okay. Right, so here we were also trying to see whether you know that journal vouchers, I cannot record this transaction now in my cash book receipts, in my cash book payments, or my petty cash. It needs to go to the general journal. Okay. Right. You will see like again EFT confirmation slip, you know that must go to your cash book payments. If the minute you see petty cash voucher, you know that must go to your petty cash journal. This transaction here was the bookkeeper has to record it because it only came from the bank statement. It was a monthly installment on the loan that was paid, okay, via a debit order. So again, it was money paid out of the business's bank account. So again, it had to go to the cash book payments. Okay, we have 5 minutes left before our session ends. Right, so again, please, guys, just a reminder, you need to revise your example activity 4.1 in your textbook, question 4.8, 4.12, revision questions at the back of your textbook, and your past test papers, which your lecturers have uploaded on ARC for you. Okay, and then also, please do engage with the bot. If there is some sections that you are still uncertain with regard to your markup calculations, please engage with the bot. I'm sure your lecturers have shared the QR code with you via, I'm sure you can, it's on your phone already. We've also given you the link. It has been uploaded on ARC. So please do engage with the bot. Okay. And just to say you for those that have joined, thank you so much for joining today's session. I know you got this. Just keep calm, do your best, and success will definitely follow you. And good luck for your upcoming test on Friday. I'm sure all your lecturers, we have so many lecturers that have joined us today for our session. So please, if there's anything that you still maybe need your um, thank you, Paran. Same to you. Best wishes to your students also, and to everybody that has joined today. All the best. Thank you so much for joining today's session, and the recording again, once again, will be shared with your campuses via your lecturers. Okay, thank you so much. All the best for today. Thank you, students. You are most welcome, Leon. Thank you. Thank you, Sitandiwe. All the best to your students also. If there's any student that we still have some time. If we have 3 minutes left, please. Thank you, Keegan. Apologies for not remembering that you are from my side. Thank you, Keegan. No other questions? We still have 2 minutes left. I'm willing to go back. Yes, Ditiro, I see you have a question. You can either unmute your mic or you can post your question for me.
Thank you, ma'am. I'd rather unmute. Yeah.
No question.
I have a question.
Yes.
How soon will the the recording be posted on YouTube?
Sorry, I did not get that question. Sorry, what did you say?
How
Ah,
soon will the recording be posted on
oh,
YouTube?
how soon?
Yeah.